Okay, everybody, here we go. It is that time, and we have to talk about so much stuff, and I want to cover a lot with you here, people. So let's just put this. I'm laughing. I can't help myself sometimes, really. So we found out earlier today, that central banks are promising essentially to backstop the entire situation that we are in. Let me ask you. We're all friends here, right? What kind of a situation are we in? What are we actually seeing here? Um, we understand that there's an issue here, clearly, with the global banking system. Okay, but what does it boil down to? I'm going to read something to you real quick. This is from CNN Business. Now, I want you to focus on what I'm about to say. See if you can pick up on what this paragraph is trying to outline. If you have been with me for any length of time, a light bulb is about to go off in your head. So this paragraph here from CNN Business. The U.S. Federal Reserve and several other major central banks announced a coordinated effort to boost the flow of US dollars through the global financial system with the aim, hold on, of keeping credit flowing to households and businesses. Are you starting to see the bigger picture here? I don't know for how many years, but it's been a long time. I have outlined to people that we are going to face a credit crisis. This is exactly what we're seeing here. Um, it's interesting how it's a play on words. Credit, credit and debt being one and the same here. Um, it's kind of an interesting thing. So we're seeing now a phenomenon of central banks pumping the system full of more debt or currency here. And again, no matter how much they put in here, it will never ever be enough. Why? Because the number is constantly growing. The amount that must be pumped into the system must grow. Thank you, Redbeard. Thank you, Monica. I appreciate both of you. So, understanding this, we are in right now a full blown credit crisis or a liquidity crisis. Okay, how do we know that? Well, because that's what's going on here. Central banks pumping the system here. You got central banks around the world now who are involved in what's something called a currency swap. In other words, the European Central Bank is sending euros to the Federal Reserve. The Federal Reserve is sending dollars around the world. Now, this is not a secret here. If you've followed this blog for any length of time, you've heard me tell you for years that the Fed is funneling dollars around the world to central banks around the world. And these central banks are using those dollars to buy assets. Now it's coming to light that that's exactly what's going on here. And central banks are trying to provide liquidity to the system. Why? Because liquidity is drying up. Does this sound familiar? Bells and whistles going off. I've been explaining this to you since I don't know how freaking long. So this statement here from CNN here, again, to boost the flow of dollars through the global financial system with the aim of keeping credit flowing through households and businesses. You see, what people forget, really, when people look back on the meltdown of 2008, the big meltdown, it wasn't so much that the market was crashing. It really wasn't. It was the fact that credit was locking up. There was no interbusiness, interbank lending going on here. The system was about to freeze, a credit freeze. If a credit freeze, this is what they're trying to prevent here. Their aim is to keep credit flowing. So what is that telling you? If this does not succeed, and I think it's going to fail by design, we're going to end up in a freeze situation, a locking up of the system. That means transactions stop. Checks don't work, debit cards don't work. You can't get your cash out of the institutions, ATMs, nothing works. It's just over. What will work, and I've been telling people to keep a little cash around here in the case of a credit freeze, cash would work. If you were to go to an institution and say, I need milk, I need eggs, who knows what the price of them will that be at that particular point, you could use your cash to transact, but nothing else. Credit won't work. You understand? So that's what's going on here, people. We are in a full-blown liquidity crisis, a credit crisis. They are desperate right now to prevent a locking up of the system. And you all know this. If you've been with me for any length of time, this is where we're going here. Now, before we move on to a whole bunch of other things, let me just cover the market. So despite the promise, again, of unlimited cash into the system, thank you, Larry, despite that, the market finished higher, but nothing major. I mean, the S&P 500 didn't even put on 1%. Didn't even put on 1%. The NASDAQ put on about 0.5%. NASDAQ about 0.89%. The Dow put on a little more than 1%. 10-year yield here, relatively stable, okay? Did come up a little bit. The U.S. dollar on a relative strength basis did fall. Bitcoin around 28,000, still looking pretty sweet here. Gold and silver catching a bid as well. Look, this shouldn't surprise you, what we're seeing. The flow of cash going into gold and silver and even into cryptocurrencies should not shock anyone. Of course, it will surprise those of you that hate cryptocurrencies for whatever reason. I've been telling you that cash is going to eventually seek other places to go, and that's what we're seeing now. Although we did see some cash go into the equity market today on the promise of unlimited liquidity, okay, by central banks. And but what you're not being told is this is hyperinflationary, okay? You and I have covered right here on this blog, I don't know how many times, repeatedly, how we, with regard to inflation, we haven't seen anything yet. As I'm going to tell you right now, and hopefully you are a subscriber to my free newsletter, link in the description of this video. I put out a couple of pieces of work today. One of them was a tsunami. A tsunami of inflation is going to hit the world. It's global. And this is not by accident. Again, central banks are in no fight at all to stop inflation. If they really wanted to stop, slow, or reverse inflation, they could contract the money supply. But you will never hear about this. Not even a syllable, not a word whatsoever from the mainstream propaganda ministry. They can't allow you to know that. So again, we are going to, in my view, we're going to get a hike this week from the Fed. This is Wednesday. Tomorrow is their meeting of the mindless. Look, the Federal Reserve, central banks, these are the enemy. They are public enemy number one. Number one. Okay, they got to go. These institutions, they're not going to. They got the stranglehold on the world. And there are some people like myself and all of you who are calling out these institutions here. But what they can't allow you to know is this is everything you're seeing right now is not by accident. Anyway, on the back of this, I want to cover a few things with you. So all of you understand this so-called rescue of First Republic Bank. This is how it was sold to the people. This is a rescue. There's $30 billion. Thank you, 11 Wall Street banks to supply the rescue First Republic. It was never a rescue, okay? Never. All this was, there's a run on that bank right now. There's a run on a lot of banks right now. You're not allowed to know that, but First Republic, there's a run on the bank. That $30 billion was only to cover withdrawals. That's all it was. Now, First Republic, their stock was halted from trading multiple times today. It was down 50% at one point today. Okay, so don't believe a word, and I know you don't, from the mainstream propaganda. A rescue. It's a rescue. No. They were just these mega banks said, hey, you know what? We're going to get this money back anyway in the form of deposits. So let's throw $30 billion into First Republic. People are going to withdraw it and put it right into the big institutions. Exactly how it's going. Thank you, Big John. I appreciate that. And here's another interesting thing, and this isn't going to surprise you. It's starting to get some coverage right now, and I want you to, look this up for yourself. So hundreds of banks at risk of collapse. Duh. Thank you, Jeffrey. Yes, many hundreds of banks around the world. It's probably maybe in the thousands of banks are at risk here. But you can't know this here. But the hundreds of banks, this particular one was hundreds of banks at risk of collapse. Very interesting there. Now let us move forward here a little bit. So we understand this whole. It's unbelievable, really, and I covered this earlier. Thank you, Charles. How UBS is buying Credit Suisse pennies on the dollar here, but UBS today had its credit rating downgraded. Thank you, Arturo. Appreciate that too. And their stock took a hit. So what are we witnessing here yet again? Let's not lose sight of what we're seeing here, people. This is a full-on, full-blown liquidity crisis, credit crisis. And we know this is happening just by having one eyeball open, and you can again, just by the takeaway from this one sentence here, it's unbelievable. How central banks are right now trying to boost the flow of US dollars through the global financial system with the aim of keeping credit flowing. Unbelievable. It's not going to work. No matter what they pump into the system, it's not going to work. Now, this is something I want to cover with you. It's really important, and I want you to have this. I wrote this piece on Sunday. Financial system, and we all fall down. Thank you, Greasy Cheeks. That's awesome. Greasy Cheeks. That's awesome. I love it. Anyway, let me read this to you, and I want to ad lib. So, financial system, and we all fall down. Exactly. You can see what's going on here, people. No surprise. Yes. What I have to tell you is how proud I am to say that this community here, everyone here, there's almost 250,000 of you around the world. You've all been aware of this. We have been so far ahead of the curve. It's just frankly unbelievable. But we don't really, look, when all of us, I don't think we're any smarter than anybody else. I just think that we're able to put together what's going on maybe a little better than the next guy. It doesn't mean that we're smart. It just means we're paying attention. You understand? I've been telling people, raise your awareness for I don't know how many years. Well, here we go. So anyway, financial system, and we all fall down. If you subscribe to my free newsletter, this is in your inbox. I want you to have it. I want you to share it. I want you to do whatever you want. So here we go. Ready? Once again, the global financial system finds itself in a crisis. This is how the mechanism works. Crisis to crisis. You know this. Indeed, a new full-on worldwide financial system banking crisis is upon us, and it's just getting started. Look at the videos that I did just prior to this SVB bank meltdown. I wrote in the titles, systemic meltdown. The system is finished pretty much. I've been telling you this for the longest time, but now it's coming to light. Now, this is really where I want you to pay attention, okay? Let us consider. This is how I want to show you there's a literal crime in progress. A crime in progress. And you and I are the only ones paying attention. Is it even remotely possible that the banking regulators and central banks simply missed what we're seeing right now? Meanwhile, we, the people, you and I, we saw this coming. Is that even possible, really? How about no? There is absolutely no feasible or realistic way that banking regulators and central banks could have not seen this coming from miles away. And here are just a few reasons why. Okay, you're already aware of this stuff, but now it's going to come together for you. Let's start with this. Every bank, all of them, is required to submit financial reports to the regulatory authorities every quarter. And moreover, even without seeing these reports, it's plainly obvious that banks were failing because of just three things. At least 3 months ago, I started explaining to people there was a problem here. 3 problems: no deposits, no loans, and no deals. Since I knew that, and you were all aware of this, do you really believe that banking regulators didn't know this? Oh, it gets way better. Nor did the central banks. Let's move forward. I brought these 3 things listed above to the attention of those who follow my work, beginning no less than 8 months ago. Of course, they knew it as well. Now, just to put this into a further perspective, listen to this. The average savings rate, which is calculated as a percentage of cash which people put away after expenses, thank you, Tyler, is 8.84%. That's the average. Now, keeping the average in mind, today the savings rate has dropped to just 4.7%. And personally, I think this number is grossly inflated. Why do I say that? Because people are borrowing just to make ends meet at their fastest pace ever. Meanwhile, they've also depleted, we'll talk more about this, depleted money market accounts. They've depleted their savings accounts. So this number is definitely inflated. So the savings rate has been almost cut in half. Thank you, Matt. With respect to no loans and no deals, year over year, mortgage applications have dropped a record 43%, and bank refis have dropped another record 74%. And on top of all this, loan delinquencies across the board continue to skyrocket. So you tell me, you try to convince me, banking regulators didn't see all this coming. They didn't know it was coming. Central banks, they had no idea. Janet Yellen, who thinks, what did she say? Janet Yellen today. Oh, this is beautiful. Yellen, quote, are you ready? Liquidity is strong. Personally, I think she wet herself. And that's why she's saying, ooh, liquidity is strong. I just wet myself. Really, liquidity is strong. Liquidity is drying up. We're in a full-blown liquidity credit crisis. But she wants you to know that she's all wet down there. Liquidity is strong. Anyway, let us move forward here. But it gets even worse on top of what we just covered here. People are withdrawing cash from the money markets and savings accounts at a record pace. Yeah, that's going on. So no, it is not possible, not even in the remote, that those who stand in charge of the world economy, the banking system, and the markets just missed all this. Therefore, it is deliberate. In fact, it is more than just deliberate. Here we go. I'm almost done with this, so just bear with me, all right? The entire banking system crisis / global financial system collapse has been perfectly orchestrated and engineered by central planners being central banks. But why? Okay, why? The question of why comes down to just a few things. Central banks are rearranging the deck chairs, so to speak, and it comes down to a consolidation of the banking system in preparation for the rollout of an entirely new central bank digital cashless system. This was a clear example. UBS taking over Credit Suisse, and we're going to see a lot more of this kind of stuff happen. The regional banks, they're all going to get sucked right into the mega institutions. It's also about a consolidation of power. Understanding, pay attention to this, okay? Understanding that even the super banks are also facing the same issues as the smaller regional banks with no deposits, no loans, and no deals. That situation, combined with rising loan delinquencies, and let's of course not forget about the flight of cash from money market accounts and from savings accounts, because people can't cope in this surging, raging inflationary environment, which is about to get monumentally worse. You think all this liquidity crisis, it's amazing. What a paradox. When in a liquidity crisis, the system is illiquid, central banks pump the system full of more liquidity, and no matter what they do, liquidity is still drying up. It's what you would expect to see in a moment of maximum saturation, something I have discussed with all of you. We've covered right here repeatedly for freaking years. You understand? Unbelievable. This is a deliberate culling of smaller institutions to consolidate power and control into fewer mega institutions and a rearranging of the deck chairs in preparation for the rollout of central bank issued digital currency. You will work for digits on the screen, which you won't own anyway. There's really almost no difference between the dollars in your pocket. You don't own these things. They're owned by the issuing central bank. We owe them back to the issuing central bank, plus interest they create out of nothing. That's the system. It's incredible. Let us remain mindful that for many months, central banks have been on a mission. Oh, yeah, they're on a mission to aggressively raise rates into what is a cratering global economy, raising rates under the guise that this is how they will stop inflation, which continues to rise. The truth is this. The truth, my friends, is always in your face. The truth is this. Central banks never, ever had any intention to slow, stop, or reverse inflation. Because if they really, really wanted to stop, slow, or even reverse inflation, all they would actually have to do is contract the money supply by raising the capital reserve requirements of the banks, which now stands at zero. Amazing. Central banks, by raising rates, have deliberately caused the world economy to crater by crushing the consumer. You see, you're not supposed to know that. And therefore set the stage for the current banking crisis, which will lead to, again, the problem, reaction, solution. We have a problem, everyone. People go crazy. They react. Please help us. Please. We need a messianic figure. We need someone to help us here. And they're, of course, going to be the Messiah here. Oh, we have a solution for all of you. And that's going to be their new digital system. And they're going to point at China. They're going to point at Russia. They're going to point at the war and everything else here, even our illustrious thing of a president. Okay. Look, you know how this works. The presidents, kings, queens, monarchs, dictators, they don't amount to a pile of crap. Okay. It's the central banks that rule the world, period. And they're dragging everyone down this rat hole into a global financial insolvency. And what are they trying to do? It's an amazing thing. What they're doing here, think about what I'm about to tell you. Pouring liquidity onto, no, pouring, I don't even know what the word is here. I don't know. It's like a waterfall, like Niagara Falls, of liquidity into an illiquid system. And no matter what they do, it's not going to be enough. It's like trying to save a drowning man by pouring more water on him here. We have a full-on debt crisis. And what do? They got to inflate the debt. That's all this is here. They're adding debt to the system. Liquidity, debt, credit, debt, all the same. You understand? I hope you do. I think most of you do that follow this blog. And honestly, look, we got this, you and me. You know, we're ready. Let them do what they want. Let them do what they want to us because we're ready, mentally, spiritually, physically, at least from a financial standpoint. You know what we need to do here: gold, silver, platinum, palladium. Here you go. You know, this stuff like that. Start getting together with like-minded people. It's unbelievable what we're seeing, but we haven't seen anything yet. Look, how many years have you and I, all of us here, there's 3,600 people, over 3,600 people watching this live stream right now. And I think that's, I wish this number were 10 times that. Okay. Again, if I were licking toilet bowls and eating Tide Pods, I'd have 10 times this number, but it's an incredible thing what we're seeing here, people. It really, really is. Anyway, so with all that, people, I'm going to let you all go. I want you to get your copy. Like I said, please just take a nanosecond and subscribe to my free newsletter. You're going to get all kinds of stuff through all day long. All right. I want to keep you, all of you, in the know, in the loop. Okay. This is a global thing we have here. Granted, only 243,000 subs. I wish we had 10 times this, people. And that's where you come in. I need all of you, to get this stuff out here. You got to share it. You got to make people hear this stuff because they're not going to become aware of this any other way. Greg is a banker. Greg is not a banker. Are you retarded? Oh, I'm not supposed to say that. Sorry. No. Aaron L. No, I'm not a banker. I'm a guy who is out here trying to help all of you to understand the system as well as I possibly can. And I think, honestly, I work really hard for all of you, and I love all of you from the heart. I mean that. And we got each other's backs. We got each other's backs. Boris, you're a banker. Okay, I guess at least we all got to do something, dude. I understand. I understand where you're, look, I got it. Anyway, all right, people, look, I'm going to let you all go here. We will reconvene tomorrow in the morning. Let's just see what happens. It's incredible. I can't wait. I honestly can't wait till Wednesday, which is the Federal Reserve announcement. It's going to be, like I said, 25 basis points, 50 as an outlier. We'll see how the market reacts. But when you got the situation here where massive amounts of liquidity is going to be added up to a system where the liquidity is drying up, credit is drying up. It's out of control. It really, really is. But like I said, we got this covered. Really, we really do. All of us. All right. I will see you all in the morning. Have a great rest of your day. Please comment. Please share the video. Get it out there. I need all of you to do that. All right. I'll see you in the morning. Take it easy.